The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome to the Money Masters Show, folks. I'm your host, Steve Rhodes. Thanks so much for joining us. This is Thursday, already January 17th. The year is just clicking on by. Hope you're off to a great start of your Thursday. As we take a look at the markets right now, you've got the Dow is up 39 points, trading out at 13,550. Composite up 11. That's up about 0.4%, out at 3128. The S&P 500 up about 0.3% as well, up almost 4 points, out at 1476. Russell 2000, the leader in the clubhouse, percentage-wise up 0.5% here, up about 450, trading out at 886. Our call-in number is 88. What? 88. I mentally lost the call-in number. That's okay. I'll come back to our call-in number in just a moment. 877-927-6648. Sorry about that. You guys ever have that happen to you? It must be a part of age out there. In any event, 877-927-6648. Give us a call if you'd like us to take a look at one of your stock charts. The key number on the S&P 500 today is going to be taking a look at that September 14th swing point high. That is the 1474.51. Right now, the S&P trading out at 1476.52 out there. So that is the key that you're going to want to be paying attention to. Let's go take a look at our other indexes out here. Let's take a look at the NDX 100, see what that is doing. The NDX 100 been traveling in a sideways consolidation box range here for really ever since January the 2nd. And you can see the upper boundary of that range, which price has been contained within inside it, is the 2746.50 level. Right now, the NDX is trading out at 2743.80. 81 got up above that level, has rejected it thus far. You can see, so we've got the top here is pretty well identified, as well as the bottom from a support area standpoint. The bottom also the January 2nd gap up. That is 2716.30. Now, the longer that the sideways trading range continues, this little box range here, they typically resolve themselves to the upside. But you know that's we'll see. But you can. The key is that you have the identified area of support or resistance, so you'll know when a breakout or a breakdown is going to occur, and is going to be based on that January 2nd candle. So it's going to be the 2746.50 or the 2716.30, whichever one has a break first, which means a close above or a close below, will be giving you the direction of prices to come out there. So that's on the NDX. Let's go take a look at the New York Stock Exchange, see what that is doing right now. The New York Stock Exchange trading out at 87.43, so that is gapping up and over its highs here, most recent highs of January 15th. That is at that level here. And I'll go ahead and put this on the weekly chart first. So on the weekly chart, what we've got is a three drive to a top pattern on a weekly chart as it's coming in to the resistance area of May of 2011. Now that price is 87.18.25, and you can see prices traveling above that level right now. The next area of resistance for the New York Stock Exchange is going to be the low of August 17th, 2007. That low was 88.11.55. There was a set of planetary conjunctions that for the previous 200 years, anytime those showed up, that had marked a bottom. Once that low was broken, and it was broken really with conviction back in June of 2008. That really was the beginning of the bear market, and so you could, if you do get when you do get the New York Stock Exchange to close above that low, 88.11.55, that will, and if you take a look at the August 17th level and the other indexes, the S&P, the Dow, and so forth, you can see prices traveled above that. But it's really the New York Stock Exchange that you want to be paying attention to, because it is the true breadth of the marketplace. So you've got a three drive to a top pattern that is out here. We'll see if that typically will. Now, here's the thing with a three drive pattern. When these things fail, They're giving you a great piece of information that a strong trend is underway. Whatever the reasons are, whether it's a liquidity event, whatever it might be, that's a real beautiful thing when you've got a 3 drive to a top pattern also coming into other areas of really strong resistance, especially one such as the August 17, 2007 time frame down at the 88.1155. Has just only about, 70 points or so to go in the New York Stock Exchange to tag that area. I suspect that is going to be a strong area of resistance. That's on your New York Stock Exchange. If we take a look at the daily chart out here, the daily chart shows just simply an expansion of swing points going back to September 14th. We know that's an important swing point. Down to the that's the high, down to the low on November the 16th out there. That low is 78.41. If you take a look at just simply expansions of swing points, 86.98, we're just going to call it 8,700, was the 1.272 expansion. It's at 87.46 right now. The next level up on the Fibonacci summation series, the 1.618 expansion says 89.32. So you get a close above the trading session from 2 days ago, which is January 15th. That high was 87.1635. That is where price would want to travel up to, 89.32. Now, it is the New York Stock Exchange, in my opinion, that you want to be paying attention to, well, for a number of reasons, but here is where you want to be paying attention to for a reversal signal in these markets, if you ever get one. And we will get one. It's just a matter of when, because there is so much divergence out there with regard to the rising tide that we see in the markets, suggesting that there's going to be some kind of a hard fall out there. And you'll see the news media change, and I don't know where it's going to come from. I just know that the divergence in the stock charts that are out there say that it has happened in the past, and if you're a person that believes that history repeats, well, we're going to get another history lesson here. But you can find out when that's going to occur when you get a reversal signal in the marketplace out here, and you'll see that through candle formations. Let's go take a look at the other strong hands in the marketplace. That's going to be the Russell 2000. Let's go see what the Russell 2000 is doing. The Russell now taking out its most recent swing point, which would be just from 2 trading sessions ago, January 15th. You've got the Russell trading out at 887.23. It is on its way to the 897.05. So it's got about 9 points left before it would make a 1.272 expansion. The Russell 2000, you can see on the daily chart here of the relative strength index, you can see that it is up in the extreme areas of being overbought. So it's an area here. This is not where you would buy. You use this tool here, the relative strength indicator. You want to be selling when prices in the overbought area. You want to be buying when things are in the oversold area. That's if your intentions are to sell at highs and buy at lows. And so you can utilize this, but you need to be able to utilize this with a combination of tools, whether it's a pattern formation, whether it's a Fibonacci tools, whether it's tests of swing points, whether it whatever tools, and then you're using the candle signals there to be able to identify reversals. And the majority of candle signals are reversal signals. There are some continuation patterns out there. In my newsletter sent out to subscribers this morning, I identified a area that was a continuation pattern, and it was in the ES Mini on the daily chart. And it gave the parameters. If we closed above a certain level, that it was what's referred to as a rising 3. I'm sorry, not a rising 3. It is a, there goes that brain again. But it was a continuation pattern. That'll come back to me in a moment. In any event, let's continue on. So the Russell 2000, 897.05 would be the number short of any other reversal that we would see in the marketplace. Let's go take a look at the Dow. I don't think we took a look at the Dow chart, so let's go take a look at that and see what its price patterns are. And if we take a look at the Dow, one of the things you're going to see here, you're going to see 2.786 Gartley patterns, and both of them now failing. So the first 0.786 Gartley pattern takes you back. The top of that pattern was on May 1st, 2012. That's if you are watching us on Tiger TV, that's what you're looking at on your screen. Maybe you're listening in on your mobile device because you went to tfnn.mobi. You can always catch the the live stream of this on your smartphone, just go to the homepage of TFNN.com, and over on the right-hand side, you will see the buttons. You'll see some smartphone devices. If you click on that, you'll get the live stream of this. This show is also archived on Channel 10, and that way you can take a look at the charts that we show. Now, what's important about a .786 Gartley pattern is that when they fail, they turn into butterflies. Gartleys turn into butterflies. They'll do a move of a move, 100% move of a move, and just take a look back on the charts here. If you go back to May 1st, 2012, is it May 1st? Yeah, May 1st, 2012, in the Dow, that high out there was 13,338. Then you had the sell in May, and it was sold down all the way into the lows of June the 4th out there of 2012, created a really strong, powerful candle pattern, the same one that we had here in November of 2012 as well. But you can see the .786 Gartley pattern here, basically completed around July 27th, 2012 out there. And came in there with a wide-ranging bar. As soon as that failed, you then had a move up to 100% move of a move. That is normal. That occurred on August 21st, 2012, before it pulled back. Now, if we take a look at expansions of swing points, the expansion of swing points, the 1.272 level of that would take it to 13,693. In the case of the Dow, when it made its high, and we're taking a look at the swing points now that it's trying to deal with, which is the September 14th level, the October 5th level. It's really October 5th, 13,661 versus the projection of a 1.272 butterfly that completed on October 5th at 13,693. How do you like that, folks? How does that work? How was it that Leonardo, not DiCaprio, but Leonardo Fibonacci out there, Leonardo da Pisa, Fibonacci, how is it that he was able to come up with such important math all the way hundreds and hundreds and hundreds of years ago? How about that? So you've got a 1.272 expansion that Gartley turned into a butterfly. So is that what's going to happen now inside the Dow? Well, first things first. First, you're going to see a move of a move, 100% move of a move. That means that the Dow's first target now is going to be that October 5th high, and that's going to be at the 13,661.87 mark. You've got the Dow. Now, the Dow needs to do today is close inside the low of that candle. That is what's being tested here, and that is 13,568.75. So it's very easy to give you what it is that you should be looking at from an index standpoint in the markets. A reversal today would be the S&P closing back below that 1474 level, that and creating a bearish reversal candle. Then what you would have is you'd also have the Dow getting into the October 5th swing point and rejecting that. You'd want to see a reversal candle as well. Otherwise, you're going to have an expansion of price. You're going to see the Dow move up into the test of that October 5th level, again, 13,661. So pretty easy to put together. On the daily chart, you can see it is not in a bought mode. It still has more room to run to the upside. You can see each time, though, that the Dow does get up into that 70% level of that relative strength index. That is when you really have to be careful, because why? It's got to work that self off. It's got to work it off, and it does that by either moving sideways or pulling back out there. That covers the actual indexes. When we come back, we'll take a look at the ETFs. We'll go take a look at Mosaic and anything else that you'd like. All you have to do is give us a call at 877-927-6648. The SPY right now, volume behind the move here, 32 million shares going into and trying to tag that swing point high on September 14th, and that's got 169 million shares. Pretty good volume for the first 45 minutes of trading. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow up 65 points. S&P's up 7 right now. Composite up 18. Apple hasn't really budged a whole lot. It's basically flat at 505.91. And back to the SPYs here. So in the first almost hour of trading, just shy by about 6 minutes here, the SPYs here trading right now at the top of their range out at the 147.83 level. 33 million shares. Now that 33 million shares is coming into that swing point from September 14th that has 170 million shares. We'll see what kind of volume continues into this here, and if it closes the SPYs here, if they close just where they're at about right now, will not have given you an indication the SPYs want to go ahead and test the swing point high of September 14th at the 148.11. So volume will be important to watch, but so far no test yet. Of course, Let's go take a look at the other ETFs. Let's take a look at the Qs. The Qs here, we looked at it earlier with our man Lou from Nashua, and the range here on the Qs, the battlegrounds have really been drawn. That is going to be the downdraft here of October 19th. If the Qs can close above 67.27, they're trading right now at 67.28, and even if it does it on light volume, it says that the pattern that you're looking at on the screen here on Tiger TV could go ahead and complete, and that is a Gartley sell pattern. It's got great Fibonacci geometry there. It's a 1.68 expansion of the B2C set of swing points. It's a 0.786 retracement off of the highs out here from September 19th, and that may be where the signal comes. But you got to take things one thing at a time. Right now, the battleground, very simply, the downdraft from October 19th was 75 million shares. It gets up above that, and even if it's on lighter volume, as long as it stays above that, it would want to go ahead and complete that pattern. Now, volume-wise so far, 9 million shares. So 9 million shares in the first hour of trading going against 75 million shares. Doesn't look like it's going to have the volume today to take that out, at least not in the early morning hours. So the Qs here traveling with inside the trading range from 67.27, that's your high, really down to the low of 66.17. But so far it has not been able to close below the open window. That is the low of the January 2nd candle at 66.48. Let's go take a look at the Dow Diamonds, see what's going on inside the Dow Diamonds volume-wise and where that is traveling to. The first time, quite frankly, since November 7th of 2012, the Dow Diamonds now getting inside the trend line. That's the trend line that takes you back to the October 4th, 2011 highs. You'd use the bottom of that touch point and the bottom of the June 4th level. The Dow Diamonds had broke through that area, did that on November the 7th. You can see the Dow here made a nice move, made a 0.786 Gartley sell pattern. That was when when price moved up on December 18th. Did it with decent volume. Price moved up with 6.4 million shares. All the indexes finished up towards their session highs on that day. And if you take a look at Fibonacci sacred geometry numbers here, this one's got it all. You got a 0.786 retracement off of the high of October 5th down to the low of November 16th. You had a 2.618 expansion. That took you right to the 133.87 was the number, and you had the Dow Diamonds on December 18th moved to 133.73 before they started to pull back. However, what we have here is we've got a failure of a Gartley sell pattern. And that failure sets up quite frankly, sets up the likelihood of a butterfly pattern. First things first, Dow Diamonds today taking on the swing point high from October 5th. That's got 4.5 million shares, trading thus far 2 million shares. So the Diamonds have the volume, no question about it. Obviously, volume comes in the early stages. If we switch over to the 10-minute chart of the Dow Diamonds, let's do that, and let's take a look at the volume pattern here. And what we have seen is a couple of big up spikes here. So it wasn't just at the open. In fact, it was at the 10:10 time frame as we were coming on to, let me just refresh my chart, make sure that I've got all of the data here and that it's accurate data. I want to make sure I'm giving you accurate information. Now, on the 10-minute chart here, what you do see is you see price moving into that overbought territory. Says that we should start to see price start to move sideways. And we'll see it with regard to the candle formations that are out there, sideways to lower. But we do see volume coming in to the Dow Diamonds. That was taking place at 10:10. You had 1.3 million shares during that 10-minute session and 1.2 million shares in the last 10-minute session coming in at 10:20. We've got another minute to go here in this next 10-minute session. Volume falling off here. Only 190,000 shares out there, but the Dow Diamonds, in the last 20 minutes, putting some volume into the move out there. Let's go take a look at the small caps, the IWM. So the number that you're looking for today, if the Dow closes inside, the Dow Diamonds, that is, closes inside 135.48, they'll seek out the highs, 136.44. 877-927-6648. BlackRock up $7. VF Corp down almost 4. Regeneron down 360. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 62 points right now. S&P's up 6.5. And let's go take a look at Mosaic for our man Rick in British Columbia. And if you're following along on Tiger TV, the first chart that we'll start with is the weekly chart. Now, the importance here of the weekly chart, this is an equity, folks, that traded for as much, got up to a high in June of 2008, got up to a high of 163.25, made its low back in November of 2008, down at the price point of $21.94. That's a fall from grace for sure. But let's pay attention to the volume bar out here, and that volume bar that we would be paying attention to is October 10th, the week of October 10th, 2008. That price spread, 31.43 was the low, 42.20 was the high. Now, what I'm going to do here is I'm going to go ahead and put a line across the top of that candle. We'll put that in red, so you can see, and that's the top of that high volume bar, which was October 8th, and that means the high is 42.20. Now, price came back, and remember, volume there was 130 million shares. Price came back and tested that several times. Came back and tested it back in July 2009, did it with 44 million shares. You had a nice bullish engulfing candle for the week of July 2009, coming off the bottom with 72 million shares. So what you can also do, and let's just do this here, I'm going to draw another line back on that swing point on that volume candle, that bullish engulfing from July 17, 2009. We'll go ahead and we'll put that one in black. And I'll go ahead and actually put the volume on that bar here so you can take a look. We can look together at the volume as price was then moving back there. We can see that high volume bar out here from October 8th. I don't need to put a red line there, because we can clearly see that was the highest volume spike out there. So then what happens, looks like you've got an A to B equals CD pattern on the weekly chart on Mosaic, coming back. Let's see, here's your A point, which was the lows back in 2009, makes a high on August 28, 2009, right around the 55.73 level, pulls back to October 9th, the week of October 9th, and the $45 number makes a 1 to 1.272 A to B equals CD pattern. Completes that and retraces all the way back down to where it began the breakout, which was in July of 2009. Again, 72 million shares. The low of that bar, 39.39. What does it do? Gets down to 38.79, closes at 46.13. Closes at 39.43. So closes at 39.43. That was above. That was 4 pennies above the candle from July 17, 2009. That had 72 million shares. The test on the weekly basis was on 24 million shares. What do you get that next candle? It looks like either a bullish engulfing or a bull sash candle here, moving off with volume. So the test of the lows out there were done. That's waiting for something to come back to a breakout area. I know that there's a lot of folks that are taking a look at the dry shippers, including this folk here that is talking to you right now. And we'll go maybe take a look at the dry shippers, because you want to wait for things to come back into a breakout area, do it on lighter volume before you take your next attack. Now, Mosaic obviously has got quite an overhead supply line, and equity, that was traded in the 160 range, all the way back down to the lows of $29 or so, and there were people that rode that thing all the way down, $21. And we can see here what it's been doing since the time frame of October of 2011, really trading in really a sideways trading range. If we go ahead and mark that on the screen here, let me just draw a black line across here. You can see the upper boundary. It's got a little bit higher to go, in my opinion, before it hits that upper boundary. It's trading right now coming into the swing point here, which would be, let's see, the high of the week of September 7th was 61.98. 61.98, that is the number. So it's the week of September 7th that we'd be looking at. 20 million shares. It's trading inside that level right now, and let's see how that level was approached. Price came into it the week of January 14th with 23 million shares, so not enough volume. Says to me that Mosaic should get up to the resistance area, which is going to be somewhere around $61 or so. That's the area that has held as resistance before it decides to go ahead and back off. It is making, if we take a look at retracements, just take a look at the last retracement, and that would be coming off of the low of June 8th up to the high that was put in September 14th, and you can see the 618 level, $48.16. This equity actually pulled back to $48.29. So the pullback would likely be another 0.618 retracement on Mosaic. That price point might be, now this is just an estimate because it hasn't finished its move up, or at least it doesn't doesn't appear to, but it looks like it would pull back into about the $53 price range. That's on what the weekly chart is telling us. If we take a look at the daily chart, and this is why you want to take a look at different time frames. Take a look at each equity, spend some time, do the same thing that I just did, which is go first to the volume bars, see if you've had a high volume bar that's been tested, either a low or a high. Take a look at the equity as it's moving into a swing point. If it's traveling with inside there, if it's traveled in there with lighter volume, says that when it gets up towards the top of that swing point, it will likely go ahead and back off. And then you know your Fibonacci numbers to take a look at, 0.382, 0.618, 0.786. Well, the beauty about this equity here is as it was also making that 0.618 retracement, that swing point that would take you back in that November time frame, this equity made an island bottom reversal candle formation. As bullish as they get out there, island bottoms, and bearish is just the opposite, island tops out there, and that's why you want to be paying attention to those. So this here gave you real bullish signs. You can see on the daily, it's moving up into the B point of an A to B equals CD. The actual volume that it would have to take out would be the day of September 7th, 5.3 million shares. Hasn't gotten up there yet, but in the last few trading sessions, we're seeing volume kind of fall off a bit, 2.5 million to 3 million shares. Maybe it's just building some energy to take on that B point. And if it does, that gets over the price of 61.98 with more than 5.3 million shares, then it will actually travel up to the 65.90 level. Now, let me see if I go back to the weekly chart. What is the top? That would then go ahead and take out those highs. It would actually come back and compete with the October 28th high out there. But one thing at a time, we can see what the setup is on the weekly. We know what it has to do on the daily to go ahead and to try to bust above that area. We do know also at these lows down here back in the November time frame, it's got a very bullish configuration. The equity here is right now, you can see it moved up into the relative strength upper boundary line that said that it was overbought. When you get overbought, you've got to work itself off. That's in essence what it has been doing here over the last 5 or 6 trading sessions. This has support now at this bar that was recently taken out from October the 2nd. The high there is 57.37, 9.9 million shares. That level was taken out with a volume of 8.4 million shares. So it's not a swing point. It was an area, it was a gap down. Most certainly was a gap down, and that area should have held as resistance. But Mosaic moved up through it with enough volume that level now should really act as support. And again, that is the day of October 2nd, and that high is 57.37. So that is on Mosaic out there. Let's go take a look at IBM. Let's go see what IBM is doing here today. We know that IBM was moving back down and testing an open window that has held as support. Folks, that is the gap up that was created from December 31st to January 2nd. The top of that is the December 31st high, 191.68, 4.7 million shares, as that area has been tested multiple times. It has been tested on lighter volume. The biggest volume came in on January 15th, 2 trading sessions ago, 4.1 million shares, still a test on lighter volume. That is a strong support area, and that is the high of December 31st. Hasn't been able to bust it up, but IBM is trying to get inside the January 2nd level that has 4.2 million shares. So far in trading volume today, only 756,000 shares in an hour and 15 minutes of trading. Let me do the quick math there. It's got decent volume. If IBM closes inside the price point today of 193.80, and it's 193.79 right now, it should at least tag the 195 level. That's the January 11th, but more likely it will try to travel up into the 196-ish range. That's the January 2nd high out there. We can see that is now starting to act as an area of resistance. Let's go take a look at let's go take a look at gold and silver. How about some of the commodities out in the marketplace? We haven't done that. Bonds. Let's start with bonds. Let's go see what bonds are doing. If we take a look at bonds, we can see bonds here. That's why these open windows, these gaps up or gaps down, are so important. You don't want to be afraid of them. They are your friend. They are one of your best friends out there because they help you to identify areas of support or resistance. In the case of bonds, you can see bonds here And it helps. What it helps you really do, folks, when you're doing your money management, your trade management, when you're identifying areas that you're going to exit, you're either going to look for swing points, because on a move up, in this case here in bonds, let's say you went ahead and you took a long position in bonds, a TLT, whatever it is that you might have traded. If you take that back in the January 4th time frame, when it was testing a swing point on lighter volume, and so you had a successful test of a swing point on lighter volume, your target ordinarily would be the next swing point on the way up. Well, that would have been the December 28th level in the 148.250. However, what you would have looked at first, you would have seen that gap down, and that gap down really would have been your first area, your target, your first area of resistance. And when you know that that is an area, it doesn't mean that you don't take the trade, but do you take a look at the money management and you know that you're going to be paying attention as that area gets hit? Well, in the case of bonds here, so this is bullish scenario for the bulls out there, you're looking at that open window from January 2nd. That's assuming that the correlation of bonds getting weaker, the market getting stronger, exists. I say you trade each chart separately, and but in any event, let's go back to bonds here. Let's go back to the open window, which is from the January 2nd gap down. That high, 146.1. You can see that is now being tested 3 times. That means 3 tests. Folks, that just tells you that you now have a very strong resistance area in bonds. What does it tell you? It actually tells you, since bonds here are not in a overbought condition, it's worked off the oversold condition. In fact, as the bonds were making that low on January 4th, it was coming back into that over. I'm going to go ahead and move the chart back up here, because this happens to be a chart here that I've got pretty well marked up, and you can see each time that that bonds move down into the oversold territory, those being the September 17th range. You can see them as bonds were making a low back in August 17th, how price reversed, how simply utilizing that relative strength indicator. You can see the same thing occurring back in March as well. We had that occur here most recently in January 4th as that moved down. So it does set up your trade opportunity. What you have to do is identify where are your areas of resistance. Now we've got a test of that open window that is strong, resistance for sure. What would you be looking at? You'd be looking at a trade on the TBT on your next move up into that area. And so long as that window stays open, meaning that bonds do not close above 146.1, it provides you with a potential intraday shorting opportunity out there. But that's where you would want to go ahead and consider taking your positions. That is in bonds. Let's go take a look at, following this show, we got our man Basil Chapman. So we're going to take a look at light sweet crude right now. You've got light sweet crude trading out at 95.35, had a little bearish engulfing candle. 2 trading sessions go on the 15th. That was erased yesterday. This here is a chart that's got multiple different systems identified on it. So we've got Basil's wave count on here. Looks like light sweet crude is in leg C up. That says from a to B equals CD standpoint, what light sweet crude has done off of the bottom today, completed in 1 to 1.618. A to B equals CD, and it looks to me like the 0.786 retracement is just above it at 96.92, and a 1 to 2 A to B equals CD just slightly above that. Looks to me like what light sweet crude wants to do is move up into that 97.80. We're going to call it $98 to $97 price range. It's at 95.36 right now. It is not giving you any reversal signals here, and it is moving into the overbought territory, so expect it to perhaps move sideways tomorrow. But the pattern here from a short standpoint has not presented itself, and this is a chart here that utilizes and shows several different systems out here. Shows your A to B equals CD, shows your retracement, shows you the Chapman wave notations on there, just a little bit of everything for all of you viewers. Again, if you're watching or listening on the radio at tfnn.mobi, you can always catch the archive of this show on Channel 10 out there. Let's go take a look at gold and silver, see what silver is doing. Silver running into the 200-day exponential moving average. That has held it in check. That actual price would be about $31.55, trading slightly over that area today. What we do see in silver, though, and you saw the bulls step in on January 4th to take control. This was also making a 0.618 Gartley buy pattern. Beautiful Fibonacci numbers out there, 1.272 expansion of your B to C swing point, a 618 a retracement off of the lows from June 29th. So a nice pattern out there. And to look for silver. If silver can close above that 200 period exponential moving average out there, I would say that silver, we take a look at just the normal retracement would be the 618 level. That would take silver. And right now it's only at the 0.382. So it's done nothing more than a dead cat bounce. But if silver gets above this 200-day moving average, 33.19 or 33.15 would be the next move for silver. 877-927-6648. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks, and as we go into our last segment here, let's go take a look. I mentioned to you I wanted to show you the real reason why you want to be taking, especially if you are an intraday trader, and why I want you to get access to. Again, you don't have to trade the futures markets, but I want you to get access to those charts and utilize those for making your decisions with regard to entry and exit into a system. You've got more information. This is all a game or a business of having information, and you want to have as much information as you possibly can. And I'll show you why trades actually set up here where they're not going to set up if you're only following, in this case here, we're looking at the Russell 2000. I'm looking at the 30-minute chart of the futures contract. I'm going to compare that to the Russell 2000 index on the 30-minute chart, and then the IWM. And so you'll see the pattern sets up here. It doesn't set up there. There's different patterns that certainly set up, and we'll show them. But from a trading standpoint, we're going to start off here with the A to B equals CD down. We're going to use that lightning bolt pattern. In this case here, if you're following along on Tiger TV, we're starting out at 11:30 in the evening on January 13th. That's your A point. Up in the 881 level. Makes a move down to the low right around 10:30 or so on January 14th, out at about the 875 level. Makes a retracement. Looks like it's close to a 0.6 retracement to 11:30 in the morning on January 14th. A to B equals C to D. We know that 1-to-1 occurs how often? What percentage of the time? Exactly. 60% of the time you're going to make a 1-to-1. The other 40% of the time you're going to do something different. Could be 1.272, could be a 1.618, could be a 2.0, and the candles are going to tell you when the move is over. In this case here, I'm going to get rid of the A to B equals CD. I'm going to take that off the chart here. It made a 1 to 1.272 before it gave us our reversal signals. Now, we also had, it was a Gartley buy pattern that set up, and that was just simply nothing more than coming off the most recent swing point low at 11:30 in the morning on January 8th, all the way up to the high, little spike high that came in at 9:30 on January 10th. 871 was the 0.786 retracement level, so you had a Gartley sell. If you're looking at the numbers that are on my system here, this is the TD Tom DeMark combo system that is out here. You got a 13 count that also came in down at 8 o'clock in the morning, so you got multiple patterns, and then, of course, you know, we got the EKG number because what was happening as those patterns were completing, the market moved down into oversold territory. You know that that's where you want to be looking for buying. You had bullish engulfing candles. You had the move up. It did 100% move of a move, meaning getting back to its swing points here, back into the January 10th area as well as the January 13th level. So it did its work to the upside. As it got up there, it also got into overbought territory. So that means it needs to move back. What does it do? It moves back, and it moves back. It makes another 13 count as it makes a low coming into the 5 a.m. time frame here on the 16th. So that's on the Russell 2000. It gave you a nice setup there. And if we look at the same time period here on the IWM, which most people will use out there, and if I pulled the 30-minute chart out here, the IWM never gave you that same candle pattern. Never gave you that same candle pattern. It has given you another candle pattern out here, but it did not give you the information and the knowledge to go ahead and pull the trigger as the Russell 2000 did on the futures contract. If we take a look at the pattern that did set up here, there was a Gartley buy. I'm going to go ahead and draw that in. That Gartley buy pattern, you can see a 1.272 expansion of swing points. That was taking place at the lows at 10:30 in the morning on January 15th. If I go ahead and pull the actual index up, and I'll do that, you will not see the same pattern here on the index. So it's important to go ahead and utilize those futures contracts. Use the intradays. They will help you out substantially in your trading. Now, what do we have going on as we come into Basil Chapman? Well, we've got the Russell 2000, got into that extreme area. Got the bearish engulfing candle. It's going to have to work off that overbought condition. Folks, thanks so much for being here. Have a great Thursday. I'll look forward to seeing you in the morning. Stay tuned. Basil Chapman up next, then Larry Pesavento, Daryl Martin, David White, Ken Shreve, and none other than the Tom O'Brien Show. Have a great day, folks. Look forward to seeing you in the morning.